I've expressed this morning in the meetings that the very best markets are the ones that operate under the purest fear or the purest greed. So the two extremes actually make for the best markets. So we could draw a little continuum like this, and we could say that I'm doing my best to draw this geometrically. Okay, and we could get our little thing here, and we could say greed, and we put this over here like this. And of course, on the other side, we're going to put fear, and we'll put that. Hope I did that the right size. Yeah, we'll put that over here. So we could say, we could also say this, that the best market, actually that should be in bigger print. Whoops, let me see if I can put that on. Thanks for waiting here. Hold on. Let's just raise this up a little bit to 14, something like that. So the best markets, I'm just drawing this to sort of help you visualize it. The best market is one that has the purest form of the extremes. So you would have the extreme of greed, and you'd have the extreme of fear. And maybe up to about roughly this point coming towards fear, and maybe up to about this point coming up to greed, you would have really good markets. The best are when greed is pure and is operating in the markets, and the best is when fear is pure and operating in the markets. But all the way up to over here, where there is less absolute fear and a little more maybe uncertainty or not as much fear, and the same over here with pure greed, but you could operate out to about here with not absolutely pure greed, but still pretty good, emotional content. When you get into this area, which we'll do with even smaller, something like this, maybe. In here, this is going to be your worst markets. And these markets are going to be worst of all. And let's put that up. And the reason they're worst, I know that's really big there, but let's just put it in. The reason they're worst is because when the market is in this type of position, it's too far from from fear, to be operating with directionality and intensity. And it's too far from greed over here inside this to be working with absolute ravenous greed, or even the orb of aspect of greed, going out to here. Anything in here is a beautiful market. Anything in here is a beautiful market. This is a terrible market. And the reason it's terrible is because the main portion, and we're talking now more fundamentally than technically, the main driver of markets is fear and greed. The main driver is not complacency. It's not uncertainty. It's fear, ravenous fear or greed. And in its purest form, it goes all the way out to here or here. And this is acceptable. All of this is good in here. This is acceptable. All of this is good. And then you get in here and it's bad. It's tough. Now, within this thing that happens in here, you can get markets that are actually getting ready to make a much more important and directional move. So the reason this is worse market is because we don't have any purity in greed. We have too much static and too much other bits and pieces. We don't have any purity in fear. What we do have is a mixture of a combo of uncertainty. It's almost like a buffet where it should be just two meals, greed or fear. But now we have a whole buffet that we can select from, and the market really doesn't have the impetus to make really big and impressive intraday or larger moves. So this is a way, I just thought this up, I just mentioned this in a meeting this morning, and I just wanted to lay out that that's perhaps what we're in right now, where we did have a big move. This was a great move. There's no question about it. And I'm not necessarily saying that this is where we are right now. I'm not really certain. But I do want to say, like I said yesterday, markets are always tricky before bigger moves. We could be there, but maybe maybe take a screenshot of that and just remember this, because it is a good way to visualize how markets go through varying phases, all the way from the worst and then out to all the way the best. And obviously, fear and greed won't operate exactly together. You'll have a market that has a way ton of really pure fear, or a market that has a way ton, really big amount of greed. And we want our best trading, I mean, I'm speaking for all of us, could be said to occur, obviously at these extremes, but certainly within this distance from the extreme. This still works on both sides. This makes it much more difficult. And this is one of the reasons that if a market isn't trading the way that you understand it to trade, or if something isn't happening at all, and the market has shrunk down in volatility, and there's just too much of the buffet of concern, uncertainty. This is the market, concern, uncertainty, potential upside, but no follow through, a whole bunch of those kinds of things. That's where you are on this continuum, this line being the continuum. So we want to avoid this market in here. We get more interested in the market as it approaches about here, and we certainly are going to be taking trades in here and in here on this side. So there is something going on with the S&P right now. There is something that it is preparing for, and in that preparation period, it can get into this worst phase while it's preparing, and then suddenly it'll swing to fear or greed. And the market efficiency theory, which is a perfectly good theory, except for one really important point, but I won't bother you with that now. It's reasonable in that when markets express what they want to do, and they express fear or greed in pure form, it's difficult to be in them before the market reaches numbers that you might be concerned that they would stop at or have trouble getting through. So that by the time you try to trade what you know is going to happen, in many cases, it's already over. And that can happen, that will happen in many cases at the pure level of greed and the pure level of fear. But it happens less when you're inside this range here, which is more common. The pure fear, the pure greed is going to be a lot less as a percentage than from here to here. This is going to chew up a lot more of the percentage of the overall time in the market that greed is operating successfully, that you can be buying the market as an example, or selling the market. So we've all run into that problem where by the time you can say, oh, I know what they're going to do, amazingly, they're already there. And that was a 25 or 35 point move, and boom, they're already there and you can't get in, or they're almost there and you don't want to buy right at the last, minute. Those are markets that are dominated by the extremes of the continuum rather than, somewhere in here. Obviously, the closer in here you get to the pure greed, the better the market acts. But I think this is a good way to think about the market and say what a good market is. A good market, or a great market, is the purest form of greed. A great market is the purest form of fear. Those don't happen all that often. But there's plenty that can happen that still leaves you and I in business to be looking at and searching out trades. This area that is this distant from here to there. It's that distant from fear isn't going to do much of anybody any good. And this from here to here is too far from the circus to even hear the music, right? So this is how I think of it. And we are in a period of time right now where the market is definitely doing some unusual things. And when it is doing something unusual, I tend to not trade. I tend to wait to be sure that I've got something right. And sometimes that makes me miss something that was going to happen. But I don't worry too much about that, because I like to think of, now keep this in mind, I like to think of my individual forecasting and or trading as on a continuum as well. So this continuum is really a piece of time where a bunch of moves could happen in. And the number of moves that happen in there, whatever they are, I'm going to miss some of them for one reason or another. So I'm not overly concerned, although I am totally intentionally trying to trade whatever move I can forecast, let's say, but I'm not overly concerned if I can't. It is frustrating sometimes to have the market, zip up and go do the number you've been doing all your work on, and they go run to it and you can't get in, and that will happen. But I think if you can think of your career or your objectives in trading as on a continuum like this, you will find that you can get a lot more patience and a lot more reasonableness in your approach without getting frantic and without getting really emotional about it. Because when you get emotional and you're trying to take advantage of fear, especially pure fear, your emotion and fear, those are not two good things together. Somebody has to be the wise man when fear is totally dominating the market, and that's going to have to be you or me. Somebody's going to have to be the wise man when pure greed is driving the market. Somebody has to be wise, because two very emotional things going on, the purest greed or the purest fear, and somebody who's driven by their own emotions, I mean, to a wild sense, it's not going to work out well. So somebody has to be safe and sane and be willing to miss something, but fully intending on trying to make it work. And that's kind of how I think of myself. I fully intend on doing this or this particular move, getting in it or forecasting it, but I'm also understanding that there is some chance that I may not be able to get in it. There's actually a couple of other continuums. I might extend this idea. I mean, even as I'm talking, they're coming into my mind, but I'll leave it at this for the time being, because I'm trying to describe, just by showing this to you, that we're not in a pure greed, pure fear, or even potentially in this realm right now. We're seeing somewhat unusual behavior. The market is attempting to get ready for a more important directional move.